Hey everyone, and welcome to today's Explainer. I am absolutely thrilled to have you here. If you've ever stared at a financial prospectus or a tax document and felt like it was written in a completely alien language, you are in exactly the right place. Our goal today is actually really simple, but it's super powerful. We're going to translate all that dense financial jargon into plain English. We want to help everyday beginners start investing with absolute confidence. We're stripping away the intimidation factor and going straight to the primary source materials that govern exchange-traded funds, or ETFs. So, here's our roadmap for today. We'll be hitting 1. Decoding new ETF launches. 2. What is asset-based income? 3. The mechanics of ETFs. 4. Understanding tax exemptions. And 5. Why this helps beginners. Let's get right into it. Section 1. Decoding new ETF launches. We are kicking things off by anchoring our learning to a real-world event that just recently happened in the financial markets. Because honestly, there is no better way to learn than by seeing exactly what happens on day one of a new fund. On June 26, 2025, Victory Capital made headlines. They expanded their offerings by launching 3 brand new ETFs on the NASDAQ. Those are the International Free Cash Flow ETF, the International Free Cash Flow Growth ETF, and the Pioneer Asset-Based Income ETF, which goes by the ticker symbol ABI. For this explainer, we're going to use the official NASDAQ listing documents from that ABI fund as our master key to unlock how to read literally any ETF on the market. Now, I know that seeing a brand new fund might make you a little nervous if you're just starting out, but the source documents tell a really reassuring story. The ABI ETF is managed by Pioneer Investments, and when you dig into their background, you find a rich history dating all the way back to 1928. I mean, they actually launched the second oldest mutual fund in the United States. So the big takeaway here is that while the ETF vehicle itself is this modern tool launching in 2025, the foundation it's built on has been tested for nearly a century. Knowing exactly who is managing your money and what their history looks like is really step 1 in building your confidence as an investor. Moving right along to Section 2. What is asset-based income? We know the fund is called the Asset-Based Income ETF. What's kind of funny about this concept is how intimidating the name sounds compared to what it actually means. If you pull up the official NASDAQ background information circular, you find this exact definition. It seeks return by investing in debt instruments that are collateralized by specific assets or where cash flows are connected to the performance of underlying assets. Okay, that sounds like a mouthful, right? Let's just translate it. This fund is simply buying loans that are backed by real tangible things. If the loan isn't paid back, there's a specific asset, like a piece of real estate, serving as collateral. It's really that simple. Now, financial documents are an absolute alphabet soup. The prospectus lists exactly what they buy using all these acronyms. So CMOs, those are just pools of home mortgages. CMBS, those are loans on commercial buildings, think skyscrapers or malls. ABS, or asset-backed securities, could be tied to everyday things like auto loans. You might also see CLOs, which are collateralized loan obligations for corporate loans, or CRTs, meaning credit risk transfer securities. When you see these letters, seriously, don't panic. They are just technical labels for the everyday loans moving around our economy. Understanding these acronyms just means you know exactly what your money is actually buying. All right, Section 3, the mechanics of ETFs. So we know what the fund buys, but how is the fund itself bought and sold? Understanding this mechanic is basically a superpower for a new investor. According to the trust prospectus, the fund issues and redeems shares in massive blocks called creation units, and these units consist of 25,000 shares each. But don't worry, you definitely do not need to buy 25,000 shares to start investing. This just highlights the difference between the wholesale and retail markets. Big institutional broker-dealers, who are called authorized participants, trade these huge blocks directly with the fund. Then they break them down and sell individual shares on the open exchange to retail investors, like you and me, who might just want to grab 5 or 10 shares on an app. And this brilliantly illustrates how market data works behind the scenes. When you look up a fund, you'll actually see more than just one symbol. Straight from the NASDAQ dissemination data, we find the standard trading symbol is ABI, but right next to it is ABI.IV, which stands for the intraday portfolio value. The exchange assigns different symbols so computers and traders can track different metrics of the exact same fund simultaneously. To really wrap our heads around those symbols, we have to look at how a fund's value is tracked. The official net asset value, or NAV, is calculated by adding up all the fund's assets and dividing by the shares outstanding. The documents tell us this is strictly calculated at the 4 p.m. close of trading. But what if you want to buy at noon? Well, that's where the IIV, or intraday indicative value, comes in. The NASDAQ pushes out this estimated value every 15 seconds throughout the trading day. Knowing that the price you see at 2 p.m. is a constantly updating estimate, while the official accounting happens at 4 p.m., really helps you understand how the stock market functions minute by minute. Let's dive into Section 4, Understanding Tax Exemptions. We are going to look at a massive hidden perk of investing that beginners almost always miss if they don't read the fine print. Get this number, 37.60%. This is pulled straight from the 2025 VictoryShares Supplemental Tax Information Letter. It represents the percentage of income derived from U.S. government securities for one of their funds, the Core Intermediate Bond ETF. Why does that matter to you? Because under federal law, the interest generated from U.S. government securities is completely exempt from state taxation. Not all ETF income is taxed the same way, and realizing this can literally save you a ton of money. If we compare a few funds from that exact same 2025 tax document, the differences are huge. The West End Economic Cycle Bond ETF generated 59.66% of its income from government securities. Our previous example, the Core Intermediate Bond ETF, was at 37.60%. Meanwhile, the Corporate Bond ETF was only at 4.59%. This is a massive lesson. Depending on what the ETF invests in, your actual after-tax take-home return could vary wildly depending on what state you live in. You absolutely have to look at the tax supplements, not just the yield. So how do you actually use this info? The source document gives us a beautifully simple, practical tip for tax season. When you get your tax forms from your brokerage, you just take the total dividend amount reported in Box 1A of your Form 1099 DIV, and you multiply it by that specific percentage we just looked at. That resulting number is the exact amount of income that your state cannot tax. It's just a simple math equation that puts the power right back in your hands. And finally, Section 5, Why this helps beginners. We've covered a lot of ground today, from launch documents all the way to tax codes. Let's tie it all together. You now have a proven 3-step blueprint for financial literacy whenever you evaluate a new ETF. First, you check the underlying assets. You aren't intimidated by acronyms like CLOs or CMBS anymore. Second, you understand how it trades. You know the difference between the 15-second intraday value and the 4 p.m. NAV, and you know how those authorized participants create the shares you buy. And third, you know to look at the tax implications, hunting for those state tax exemptions from U.S. government securities. You're no longer just guessing, you're actually reading the instruction manual for your money. And that brings us to the absolute best part of this whole journey. By taking the time to understand these primary source documents, you've transformed a wall of intimidating text into a clear map of opportunity. You've got the tools, you have the knowledge, and you know exactly how the system works behind the scenes. So I'll leave you with this final thought. Now that you can confidently read the fine print, what are you going to invest in next? Thanks so much for joining me on today's Explainer, and happy investing.